Welcome back. You're watching The Money Show. And let's focus in on gold. We've got the latest demand trends that have been reported on, or that have come in the World Gold Council's latest report here in India. And we're joined by Mr. Somasundaram of the World Gold Council. And as we normally do, we speak to him after the release of a report. Thank you so much, Mr. Somasundaram, for joining in. And glad to speak to you. Could you take us through the key findings? Because the headline of the note that you've put out says that gold demand has hit, in fact, its highest level in more than 2 years. And as I look at the details, you're talking about the fourth quarter, which seemingly has been very strong. What are the key highlights, though?
Yes, the overall demand for the calendar year 2021 has been up by 10%. As compared with 2020, and a lot of that has to do with what happened in quarter four, and particularly in key markets like India and China. Overall, as I said, we saw a 10% jump driven largely by jewelry and bars and coins demand. ETF saw a very small outflow that's largely in the US, but you saw European ETFs and Asian ETFs had inflows. Still, in the aggregate level, there was a net outflow of 173 tons as compared with the 870 ton inflow last year. When it comes to jewelry and bars and coins, there has been a significant jump in the demand for the full year. Jewelry itself has about 52% jump, and bars and coins 31% jump. Central banks continue to buy. There's an 82% jump in the buying of gold by central banks. And this includes a large spectrum of central banks, not just focused on one or two big names. India too has bought gold. In fact, Indian RBI has bought about 77 tons, which is perhaps the second highest after the 200 ton purchased in 2010. So specifically, India has seen a very, very big jump in quarter four. There was a total demand of 343 tons, which is the highest ever that we have recorded in our data series. This is again driven by jewelry sales. A lot of demand that was probably subdued in the last 2 years has come out, softer prices, higher savings flowing into gold, and of course the bars and coins demand. So this is the overall scenario. China too has seen a very significant jump. UAE, most of the consuming markets have seen a very significant jump, with the exception of a few like Iran and Turkey.
Okay, I want to talk about some of the factors that have led to the outperformance or the big spurt in demand in the fourth quarter, which is the quarter ended December. One of the factors is the softening in prices, right? How much of a short-term effect do you anticipate that being, or do you think that the outlook remains strong given the context that we are in right now with risk assets being sold into globally?
Well, one of the things is globally, even the dollar price was point to point is down 4%. One of the reasons why we saw a small outflow from the US ETFs. And if you really look at the average price, the average dollar price was just up about 2%. Average Indian price was just about up 1% as compared with the last year. So, but still compared with the peak of last year, people saw these price points as very attractive, and that is one of the reasons when the lockdowns got relaxed and the social functions started coming back, you saw a big spurt in demand. And this is not restricted to India alone. Of course, India is a very special story because the jump was much, much higher than even the most optimistic estimate that we had in quarter three. But it is across the various markets. For instance, China saw a very, very significant jump in the demand. It's both in jewelry and bars and coins. It's a lot to do with what the industry did there in terms of even 24K jewelry. And India, and as I said, most of the other markets, Middle East, US actually has also seen a big jump. While there was an outflow in the ETF, interestingly, in the US, you saw that it had one of the highest demand for bars and coins. So because those investors are probably driven more by the inflation expectations and concerns that led to their higher share of bars and coin demand.
Mr. Somasundaram, and this is my last question because I'm trying to get a sense of how gold is likely to perform in this year. We're talking at a time when the US Federal Reserve could well start hiking rates as early as March. The quantitative easing program is set to start winding down in March. So higher bond yields, traditionally one would assume that with that would put a downward pressure on prices of gold. How do you anticipate the demand trends panning out in 2022?
Well, we do expect, what we saw in 2021, 797, almost 800 tons, one of the highest in the last 6 years ever since demonetization came in. We do expect that this will be the new norm. Now, coming back to the rate increases and the impact on the prices and therefore the demand, clearly, yes, we have to look at the rate increases, and that is a headwind for gold. But it is not the rate increase alone. It's also about the real rates, which means that, compared with inflation, where does it go? So inflation has now created a kind of a tailwind for gold. The second most important factor is, yes, the dollar price might be affected. But we saw in 2020, even when the dollar price was around $1,700, $1,800, it was not the lifetime high. In most of the other currencies, prices were at lifetime high. So you could still have a scenario where dollar is strong, dollar price is probably facing the headwinds, but the prices in other currencies, including INR, could see a jump. So overall, at this moment of time, there are a complex set of factors, but what we expect is that 2022, there is still some demand from the rural areas, which could be the pent-up demand, which could come out. What we saw in 2021 was more from the urban areas. And we could see a demand of about 800 to 850 tons. You will not see an 80% jump in demand as we have seen this year, but in absolute terms, you are going to see a new normal of 800 to 850 tons.
Okay. All right. Mr. Somasundaram, always a pleasure speaking to you. Let's see how that pans out. In fact, I'm already looking forward to your next report to see whether the trends that you're suggesting will actually pan out. Somasundaram PR there, the Regional Chief Executive Officer of the World Gold Council. We're slipping into a short break, but on the other side, we'll take you through a little bit of a pre-budget conversation, or rather a setup for what you can expect in the next few days. So do stay tuned.